It is the pleasure to once again speak to you. I will make my initial comments on both our overall business performance and the strategic transformation that we are undergoing at Wipro. Overall, we find the demand environment quite stable, and we continue to see the movement of technology budgets from what we call as the run the business into change the business. And we see good traction in our ability to capture the change the business spend from our clients. On the macro, Brexit is on the top of the mind. Brexit's immediate impact is on the currency. In the medium term, we believe Brexit could delay some of the decision making, but we have not seen any immediate impact of Brexit. Q1 revenue growth is in line with our guidance. Revenues have grown 2.6% sequentially and 7.6% year on year. On a constant currency basis, the numbers are 2.0% and 9.5% respectively. Our Q1 margins reflect the wage impact for 1 month and the dilution due to the integration of acquisitions, including accounting policy change around amortization of intangibles and certain headwinds that we see in our India and Middle East business. We continue to invest in the strategic themes to transform our business and continue to invest in the business for that, as well as we gave a very healthy salary increase to our employees during this quarter. We are focused on building a sustainable business model. We have completed the restructuring of our consulting business that I talked about, and we are working on restructuring our India and Middle East business model. We expect the trajectory of growth to build gradually over the course of the year. We will drive operational improvements in Q2, but we may not see the full benefit because there is 2 additional months of merit salary increases that will come into effect. And I expect that the improvements will be reflected much more strongly in Q3 and beyond. We won 5 large deals during the quarter. An example of that is a multi-million strategic IT and business transformation deal with one of the large airports in North America. As part of the deal, Wipro will automate and innovate their entire IT operations with digital innovation to transform airport operations, and this will be delivered through the integrated services model that we've put in place. The key aspect of the transformation themes that I had outlined since the beginning of my tenure, I would like to give you an update. I had spoken of digital as a key focus area. In Q1, we continued our momentum to win deals in digital and training people and setting up digital pods across the globe. The common factor driving our digital business together with Design It is that clients understand our differentiated digital value proposition, which brings together advisory, design, and technology services to be able to drive digital transformation for clients. We have started to see the pickup in the size of deals that are coming from digital. Clients are moving from smaller projects and pilots to large transformational deals, and Wipro is positioned favorably to win some of those. Our total digital ecosystem revenues is 17.9%. The digital ecosystem captures the entire gamut of digital spends of clients, both across advisory, design, engineering, and technology. In Q1, we won 7 deals in digital. Some of them were in synergy with Design It across sectors and geographies. One of the good examples of a deal is a large digital transformation deal with a top 10 bank in Europe. In this deal, Wipro will deliver complete digital portfolio for the bank. As part of the program, we will conceive the customer journey or the user experience for the bank's consumer, design the digital footprint, and build the solutions that deliver the consumer experience. The deal is significant as it heralds a new scale in our digital business. I had spoken earlier on our focus on consultative selling and creation of consulting ecosystem. Our consulting ecosystem cuts across digital, consulting services, which are in technology and domain. The consulting ecosystem is drawing strengths from across all of our units and acts synergistically as a tip of the spear in opening larger, more strategic opportunities for Wipro. Revenues from our consulting ecosystem are at 5% of our total IT services revenue as per the new consulting ecosystem that we have put together. During the quarter, we progressed on our plan to train 20,000 people that we have to train over the entire year. And in this quarter, we trained 8,200 people out of the 20,000 that we target for the whole year. Our One Voice program for sales transformation, for our sales force to enable them to sell digital, has covered 750 salespeople in this quarter. Let me talk about our focus on client mining. I have met over 100 CXOs in the last few months after taking over across our top 100 customers. Last quarter, I had announced that we had launched a program for delivery leadership transformation called Adroit. We've covered 200 of the 1,000 delivery leadership that we are supposed to cover under Adroit to enable them to gain the skills for mining. I'm also happy to share with you that some of the client recognitions of Wipro's deepening partnership with key clients. In Q1, Wipro received the City Lean Partner Award for 2015 from Citibank in recognition of its high levels of service and performance. The Lean Partner Award recognizes a supplier that has supported Citi in the execution of its re-engineering objectives and supported its effort to drive client-centric process redesign throughout the company, improving the way Citibank operates. We expect our focus on client mining will be reflected in positive movements in the client brackets that we publish. Non-linearity. Our significant thrust to drive non-linearity through investments in intellectual property in the form of products, platforms, frameworks, and solutions is gaining good traction. We filed 43 new patents on IP through the quarter. I'm pleased that the response to Wipro Homes continues to be great. We have expanded use cases for homes across services and various industry domains. We now have 35 engagements leveraging homes across diverse industry segments. For instance, we have successfully completed a pilot for handling legal documents where homes intelligently categorizes documents, understands the various sections within the documents, and automatically extracts relevant information and metadata for downstream processing. Homes has been a critical differentiator for us to win some of the large deals. For instance, we won a large deal in the business process services in the procurement space with one of the largest global pharma companies to whom we had traditionally served only in the applications and infrastructure services area. In this deal, Homes would build a 360-degree profile of the vendor by ingesting relevant information from annual reports, filings, news, credit reports, and past transactions. In phase 2, it will also be assisting agents and partners to automate their queries, provide personalized clarification, enable automated reading of invoices and other transactional documents, and boost digital experience of the users. So, artificial intelligence and cognitive built into Homes is now becoming real in a large number of our customers, enabling us to cross-sell and upsell our services. Let me talk about automation. We continue to deploy robotic process automation and cognitive bots across our clients. We have deployed over 500 instances of bots providing services in areas of health check, process automation, quality assurance, self-healing, software, and analytics. Over 100 of these leverage the cognitive power of Homes. We have over 30 engagements being covered by hyper-automation, and about 30% of these use cognitive capability. We are seeing, in a lot of cases, up to 30% productivity gains. In Q1, we have released about 1,100 people due to automation-related efficiencies. I had spoken about localization in various geographies, and we are doing well on our plan, especially in our key markets. In US, we are scaling up our centers in Mountain View, Atlanta, and setting up a center in Dallas. In continental Europe, Wipro and our German acquisition Celent have an integrated go-to-market. We have set up centers in Ireland and Mexico as well during the quarter. I talked about the partner ecosystem, and we continue to focus and execute well on our ecosystem. On our acquisitions, all the three acquisitions that we completed in last year have delivered well in terms of the synergy value. I have spoken about the traction we are getting in Design It. We have also successfully closed the first synergy deal through our HPS acquisition in the healthcare domain with one of the large healthcare clients. Integration with Celent in Germany is progressing well, and the go-to-market organization is now fully integrated into one single Wipro. During Q1, Wipro Ventures completed an investment in Avamo. Avamo is a Los Altos, California-based company that is developing the next generation of business messaging solutions that capitalizes on mobile-first usage trend in the enterprise segment. The solution combines the ease of use of customer applications with enterprise needs for security, data protection, and administration. A number of our alliance partners have recognized us through partnership awards. On the employee front, we have a very energetic employee base, and we have been constantly working towards enhancing the capability and leveraging tools that millennials like. We launched Top Gear, a crowdsourcing initiative that provides virtual and physical environments to our employees globally to gain hands-on experience on numerous high-demand skills. Top Gear empowers employees to be future-ready by leveraging their available bandwidth in terms of time to upskill themselves, be mentors, and contribute to building IP and digital capabilities. Within the first 10 weeks of launching Top Gear, 12,000 employees across Wipro have been engaged through the platform and have done some sort of skill upgradation and component creation. We continue to make the right investments and are focused on executing on our strategy. Our strategy finds strong resonance with our clients, and I am confident that we will build momentum towards a stronger, sustainable, and profitable growth. I will now request Jatin to cover the financials. Thank you.
Hi, good evening, and welcome once again to our press conference. Always great to meet you all. I will briefly cover the financials for the quarter ended, the first quarter of financial 16-17. Our revenues for the quarter were rupees 13,599 crores, and which was a growth of 11% over last year. Our results from operating activities, that is earnings before interest and tax, was rupees 2,285 crores. Our revenues for the company grew at 11%. As I spoke about, IT services segment revenue was rupees 13,109 crores, which grew ahead of overall Wipro Ltd growth at 13% year on year. We had a gross cash position at the end of the first quarter at rupees 32,211 crores, or in dollar terms, 4.77 billion. So we have sufficient liquidity on the balance sheet for any strategic opportunity that we may want to go after. Our constant currency IT services revenue grew 2% quarter on quarter. And as you might recall, our guidance for this was 1 to 3% for quarter one, and we have come at 2%, which is at the midpoint of the guidance that we had given in quarter one, at the beginning of quarter one. And this was a growth of 9.5% in constant currency. Our margins for The IT services segment were at 17.8%. After we make the investments in acquisitions, we also made investments in form of the merit salary increase that we give in the beginning of the month of June. This time we gave higher increases to our employees, and that also has gone in as an investment from operating margin line. Our customer buckets, if you see, more than 75 million customer we were able to enhance by one, and more than $10 million accounts we were able to enhance by 10. So we are seeing some traction in our ability to grow our customers. We also made a good progress on gross utilization, which improved by 176 basis points to 69.9%. And as you can recall, this number was significantly lower about 2 or 3 quarters back. So we are utilizing our workforce much better as we progress through the quarters. We added 951 net headcount during the quarter, and as at the end of the quarter, the company had total employees of 173,863 in terms of numbers. Now let me briefly talk about to you the business units, geographies, and service line performance. Our healthcare and life sciences services grew 46.6% on a constant currency on year-on-year basis. This, of course, includes the revenues that we added with our acquisition of health plan services that we consummated on 1st March. So we got a month's revenue in last quarter and about 2 months revenue in the current quarter from that acquisition, and that has been added in healthcare and life sciences segment. Communications business unit grew 14.6% in constant currency year-on-year basis, and financial services grew 5.5% on a constant currency on a year-on-year basis. Geographies, we continue to see a decent traction in Europe, and we will have to wait for what would be the fallouts of Brexit and the follow through that could go through. But in quarter one, we had Europe growth of 10.2% on a constant currency basis. Americas grew 10.1%, and India and Middle East grew 8.7% on a constant currency basis. From a service line standpoint, business process services grew 48.7%, and once again we had here the impact of our health plan services acquisition, and YOY growth was 48.7%. Analytics grew 7.1% on a year-on-year basis, and overall global infrastructure services grew 7%. However, I must highlight to you that we have made certain changes in the way we organize ourselves in service lines. So some of these numbers are not absolutely comparable with the quarter one of last year, and therefore that have to be seen in that light. Going ahead, we expect the revenues from our IT services business to be in the range of $1,931 million to $1,950 million for quarter two, and these are based on the currencies that are mentioned in the presentation. This is our constant currency guidance for quarter two, and we have certain supplemental data points which you may want to go through, and from here on we are happy to take any questions you might have. Thank you.
Hi, Rukmini Rao from CNBC TV 18. Abid, what is the reason for such a weak guidance? And also, Jatin, if you could break up what really impacted the margin in terms of basis points, what has actually hit the margins? Thank you.
As you're aware, we look at our business portfolio, and then what we see at this point in time in terms of what is predictably achievable is what we give as guidance. And overall, I think the demand environment we see quite stable. We are seeing a certain level of run business getting automated, and that has a level of revenue reduction there. And then customers are investing in the change business, the digital, which is gradually picking up. So I think all of that is reflected in the guidance that we have provided.
On the margins front, Jatin?
Yeah, sure. So I will want to first take you back to beginning of last quarter. We had said that we do want to make our investments as we are, we are on a journey to fundamentally improve our trajectory of growth and our trajectory of margins. But in short term, we will have to make certain investments, and those investments have been made in terms of the acquisitions that we did. And the first was Sealant that happened from 1st January, although that is not in the current quarter, but there is an investment of operating margin in terms of the dilution that we take when we do an acquisition. Then the subsequent was Health Plan Services, which 2 months revenue got consolidated in quarter one. So effectively, there have been investments that we have made on in acquisitions. Also, so if you see, and I will give you a walk separately, but I do want to give a color on the overall philosophy of margin management. Second, we went ahead and we gave salary increases from 1st June because it's important that as we go through this journey of which is run the business, and on the run side and on the change side, which Abid articulated, it's important that we have our employees energized and enthusiastic to go after the growth and the new strategy that we have defined for the company. And therefore, it was important for us to invest that. So we have been investing. And with that background, now let me tell you how the margin movement that has taken place between quarter four and quarter one. So if you see, our reported margins for quarter four were 20.1%, but we did have a component of cost which was sitting in a separate segment, and we have moved, which is amortization of intangibles. We have moved now into the operating line of IT services business. So if I adjust the opening 20.1 for this change that we have made from 1st April, the opening from 20.1 will become 19.7. So the movement is really from 19.7 to 17.8%, which is 190 basis point. Now, of this, roughly 50 basis point is on account of 2 months of consolidation of health plan services. We gave our salary increase, and we invested in some of the people with expertise and domain that we wanted to invest in. So overall, our investment in people was roughly 1%. We had lower profitability due to restructuring that Abid talked about in India and Middle East business that we are looking at. That diluted by about 30 basis points. And finally, remaining 40 basis points was combination of improved utilization, which got mitigated by certain impact on investments that we made with our customers to enhance our business in medium term. It did impact our rates in short term, and that therefore the utilization benefit was sort of offset by that. So that impacted by about 40 basis points. So overall, we came at 17.8%.
Abid, one question on the energy vertical. Want to understand, the problems in this particular vertical has been there for the last 6-8 quarters or so. When do you see this bottoming out, and is there any hope for the energy vertical at all?
Again, the answer is not very different from what I said last time, which is that the price volatility in the oil prices is not allowing the enterprises in the energy vertical to spend on discretionary spend. So we have all of the run spend, but the discretionary spend is not opening up. There is a lot of pent-up demand, but as these companies see stability in oil price, whatever that level is, so that then they can do their business planning according to that level of the oil price and then start spending. I think any macroeconomic uncertainty that comes in delays that, because it also has an impact like most of the commodities, but especially oil.
Hi Abid, Chandra here from ET Now. In your commentary, you said you find the demand environment to be stable, but your guidance of flat to 1% is perhaps the lowest in the last 4 quarters. And July to September is supposed to be a seasonally strong quarter for Wipro. So, give me some more details on why this is happening. Is it, some legacy issue which is playing out? And at this rate, you will end the year, in single digit growth. So just take us through that. And Jatin, I know you gave a detailed breakup of, the margins, why it contracted. But if I look at historical data, it's been steadily coming down for the last 4 quarters. I mean, it was, I think, 21% 4 quarters back, and we are now at 17.8%. Is this sort of the bottom, or, because you mentioned a lot of one-off factors, but it's also been coming down on a historical basis. So again, what are the issues behind that?
So on the demand side, as you see, there is a fundamental transformation happening in the industry. So let me cover by verticals. We see very good demand in the communication space. We see stable demand in the communication verticals. Banking and financial services, we've done well, as you see in this quarter. In the European sector, there is a level of uncertainty because of Brexit in the banking and financial services sector. Otherwise, we see good demand over there. If you look at the manufacturing and technology sector, while the manufacturing space we are seeing good demand, the high-tech sector, essentially around the semiconductors and the telecom equipment providers, there is a certain headwind that we see because that entire industry is undergoing a major change. We've talked about energy and natural resources and utilities vertical. Healthcare and life sciences, we see very robust demand, both through the health plan acquisition as well as the organic part of our business.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.